Hey everyone, Abaroa, Prosper Trading Academy Wealth Instructor, prospertrading.com. Have a look. It's Wednesday, it's April 4th, it's 2018, and you know what that means. Tomorrow we start the Masters. I don't know about you guys, but I am hoping to see a Tiger charge. Would love to see him out there on Sunday in red gunning for the title. I got my green tie on in recognition of that. Okay, so I'm not in my office in Fort Lauderdale, as you can tell. I'm not in our office in Chicago. So where am I? I am in Laguna Beach, California today. I picked this spot specifically because ordinarily the backdrop, it's stunning, it's gorgeous, it's beautiful. But as you can see, we've got a thick fog that's rolling in here. And as I said, I picked it purposefully because this thick fog, well, it's reminiscent to me of the fog that's looming over the markets right now with the trade wars. I've been talking a lot about this purgatory theme where the market's going back and forth, and this week, man, there's been no shortage of drama adding to that purgatory theme. Monday, we opened up down substantially. We traded 750 on the lows in the Dow to close back 459, only down 459. S&Ps were down 59, the NASDAQ down 193, NASDAQ 100 down 90, and the SOX was down. Now, if you watched the news that day, every pundit on television basically said we had a major breach of support. Well, I'll tell you what, I'm not buying that at all. I'm not buying that at all because despite that horrific action and despite the fact that the S&P did break its 200-day moving average, in that witching hour, that final 3 o'clock Eastern hour, these markets rallied right back up and the S&P closed just below its 200-day moving average. The NASDAQ 100, they didn't get near their lows. And the Dow, well, it closed above its 200-day moving average and it stayed above the 323 low and that February 9 low. Despite the fact that in the Dow, 16 of the 30 components, they're below their 200-day moving average and the balance are below their 50-day moving average with the exception of Intel, which is skating that line right there. Now, what's the big mess in the markets? Well, we've got the Trump-Bezos feud. That's certainly not helpful, but it's not the end of the world. So we'll cut the gossip channel for a moment. We'll talk trade wars, which, yep, that's a serious situation, of course. But we've got time to potentially work this out. We've got through May. It's not happening immediately right now. This is more of a forward-looking stance. So what do we have? We're going to have the perma bulls that are going to come out here and say this is just a needed pause. And the market's going to rest here and it's going to rally back up. And then the perma bears where they're going to come out and say, hey, it's the end of the world. Now, obviously, one of them is going to emerge victorious, and they're going to come out and they're going to say, I told you so. But what I'm telling you is that they're not going to say they told you so. They're not going to say it because they meant it or that they knew. They're just going to try to capitalize off of that loud chant that they've been preaching to everybody. Well, listen, here's what I think needs to happen. Let's think about the market right now on this purgatory theme that I'm talking about. And as we're continually scraping these lows right here, I'd like to equate this to leaks in a dam. A lot of leaks have recently sprung up in this dam, and you can look across a lot of sectors which are all starting to roll over like this. Now, those leaks don't necessarily put the dam at risk of failure. They can actually repair themselves, and that's what we're going to need to see happen. We're going to need to see that market waffle around here, working off some of that recent technical damage if we want to see that market go higher. And by the way, that would be a good thing. Remember, we were on an extremely big tear in the market, which put us in overbought conditions. This pull back down to these support levels with that damage being worked off would be a productive thing. Now, the perma bears, they're going to say the exact opposite. If for them to be right, you're going to need to see these rallies that are happening hit and faded and chipping away down at those lows, effectively adding more leaks to the dam. Now, this is what the market does. You're going to have this back and forth action and no one's going to know for certain until it happens. You don't have to be hostage to the market within your financial plan. What you need to do is understand how the tools that you have in your portfolio and your financial plan work to get you to your goals, what you're going to do with your market risk in either scenario, meaning we have repair and the market runs up, or we have further damage and what adjustments you will make. If you don't know what that means, or you don't know what to do, well, that might tell you that you need to get mentally fit with financial intelligence training to better understand how to manage your portfolio risk and properly put yourself in a financial plan that may help fit your goals. I'm Abaroa, Prosper Trading Academy Wealth Instructor. Take a look at prospertrading.com. Thank you.